What's all this business about Goldbach levels?
I'm going to break down ICT's latest trade and show you how he uses Goldbach, aka Enigma, to execute all of his strategies. I was conducting some research on Nikola Tesla and his theory of numbers. Now, according to Tesla, the numbers 3, 6, and 9 were the fundamental building blocks of everything in the universe. Now, if you're a Goldbach trader and have read Hoppy's book, Demystifying ICT, what every ICT trader still wants to know, you understand the power of these numbers, 3, 6, and 9. Essentially, Goldbach theory and how every financial market is priced is based off of the Goldbach numbers, which in turn are based off of the Tesla vortex. Now, if you want to get deep into this, there are plenty of resources on Tesla, the Tesla vortex, and his numbers. I urge you to also look at Tesla's map to multiplication and composites and primes. So this is some really powerful reading. Now, while I was doing this research, I thought, why don't I apply Tesla's vortex and his theory of numbers, combine it with Goldbach, and then analyze Tesla stock. So Tesla, the electrical vehicle car company whose CEO is Elon Musk. So that's what I'm going to do now. I'm going to show you that Goldbach theory works on everything. So I've given you examples of Forex, of futures, of Bitcoin. So now I thought I'll do some single stock names, and why don't we do Tesla? So here is the stock chart of Tesla. So we are on the monthly time frame. Now, so I've explained this many times, but I'll give you a quick overview so you understand the difference between Goldbach for Forex and indices and how it works differently for Bitcoin and stock. Now, given a price, so this is the spot price of GBP right now. It's Saturday. So the markets are closed. Given a price and a power of 3, so right now I've selected the 81, Goldbach will tell you where the low and the high of the dealing range will be, predefined by mathematics, and where all the PD arrays will form. Okay, so it'll tell you the rejection block will form here, order block, fair value gap, and so forth. Once price moves out of a dealing range, so if you see here, we moved out of this dealing range once we broke below the low. All we do is we shift the dealing range down. So when price was down here, this would have been the dealing range, the high to the low. And if we break down again, the dealing range shifts down, where the old low becomes the new high. And then as we go up, we move through the dealing ranges. Now, this is how it works for assets such as Forex and crypto and indices. Stocks are different, however. So when a stock is first IPO'd, and let's say the stock price is $1, and I know a stock can theoretically IPO at any price, but let's say it starts at $1. The dealing range it will be using will be between $1 and $3. As soon as it passes above $3, the dealing range will then be between $0 and $9. Once you pass the high of your dealing range for stock, you have something called a range expansion, and then the upper dealing range will become the next power of 3. And again, once we penetrate and expand above price of $9, the dealing range will be from $0 to $27. Whenever you are within a dealing range, you then have Goldbach algorithms running to distribute bids and offers within that dealing range. This is how we make money. This is what my golden bullet strategy is based off of. This is what algorithms 1 and 2 are based off of, and Goldbach mirroring and everything like that. So this is the theory of Goldbach. Now, how do we apply it to stock? So why don't I show you how it works for Tesla? Okay, so Tesla is currently trading at $253. The high was $413. So this is how we would essentially price it up. So let's replay the tool, so just so you understand. So when the price of Tesla was $16, the previous range was 9, and once it penetrated 9, we had a range expansion, and then the high of the dealing range was 27. So this is what Goldbach was playing with. It could distribute prices anywhere between the low of the dealing range and the high of the dealing range. Okay, as soon as we penetrated the high of the range, which was $27, we then have our next range expansion. The dealing range becomes from the low of 0 to the high of 81. Okay, so you with me so far? That's how it works. Now, how do I prove this to you? So let's now replay price to where we are today. Okay, this is where we are. Now, when we were down here, below 243, the dealing range was between 0 and 243. As soon as we passed $243 for the price of Tesla, we then had a range expansion, which meant that the dealing range now became from 0 to the next number up. The next number up after 243 is 729. So this is now the dealing range we were playing in, which means, I'll map it out for you. This is the low, this is the high, and you should have PD arrays that will form in these GB partitions. So here you would have a rejection block, order block, fair value gap, liquidity void, breaker, equilibrium, and so on. Only once the price of Tesla passes $729 will you then have a range expansion, making the next theoretical high of the dealer range $2,187. Okay, so now let me show you how Tesla was behaving according to Goldbach theory. Okay, so I'm now on the 3-month chart. Price is very clever in that it is not only fractal, but it has a time component to how fractal it is. So it knows when it's in a lower dealing range that it needs to create PD arrays so that once you have a range expansion, the price action that was produced when price was lower will match the range expansion dealing range higher up. So I've gone through this with Bitcoin in great detail. So have a look at my last Bitcoin detail and it's fascinating. It has done the same thing for Tesla. Because price exceeded 243, which was the previous dealing range, our high is now 729. There we go, 729. Which means the PD arrays should form in these GB partitions. Now, what do we have here? We have a fair value gap. There you go. Fair value gap has formed in the fair value gap GB level. Do you see that? So that is your first piece of evidence that even single stock names obey Goldbach theory. Now, what has Michael taught you? Michael has taught you that there's a concept called consequent encroachment. Right, so consequent encroachment of this fair value gap would be, there you go. So he says, typically, price will want to penetrate up to the consequent encroachment of a fair value gap or the mean threshold of an order block. Now, I no longer trade ICT methodology. I'm a Goldbach trader. Having a look at the consequent encroachment of this fair value gap, price missed it. Right? Price missed this fair value gap, the consequent encroachment, but it retraced higher. So once again, I'm a Goldbach trader, so I don't look so much at the candles. I care about the GB partitions. This is where the fair value gap will form according to Goldbach. So I typically don't use the candle consequent encroachment. Within the Goldbach indicator, it will give you the consequent encroachment of any GB partition or any mean threshold of an order block. So if we go to the indicator, we scroll down, and we enable the CE levels, the consequent encroachment, you will then see that these yellow lines are all the midpoints of the GB partitions. So going back to this fair value gap, can you see anything interesting? This is the fair value gap partition according to Goldbach, and what did price retrace to? 50% of the consequent encroachment. Okay, does this look like a random occurrence to you? This is the price, 101.81, and the theoretical consequent encroachment of the GB partition would have been 102.06. Right, that is about 25 cents, I believe. It was within 25 cents of the theoretical Goldbach price. Okay, that's your first piece of evidence that stocks also obey Goldbach. Now, another piece of teaching, you have the normal Goldbach levels. So let me go back to them just to make the chart cleaner. Okay, so these are the normal Goldbach partitions: rejection block, order block, fair value gap, liquidity void, breaker block, and so on. ICT has taught you that the 50% level of the order block is the mean threshold, 50% of the fair value gap is consequent encroachment. He's briefly spoke about liquidity voids. What he hasn't told you is 50% of the liquidity void level is also significant. The liquidity void is one of the bigger partitions compared to the others. These are all percentages. This is a rather big one compared to the others. The midpoint of the liquidity void we call a non-Goldbach level. So let me put the consequent encroachments back in, and then you can see the non-GB level of the liquidity void. There you go. Now all these levels are sensitive, and they have functions in the algorithm, the Goldbach algorithm, and I'll show you how sensitive this line was. Can you see this expansion that we had? What level did it hit? It hit the consequent encroachment. So this was the 3-month target of this candle. It was to hit consequent encroachment and then retrace back. I'll show you the exact prices. 167.5, 167.67, within 17 cents now we're talking. So that's the second piece of evidence. The first piece of evidence was we had a retrace to the fair value gap. The fair value gap was in the fair value gap GB level. I guess the second piece is not only did we have a retrace to the fair value gap predicted by Goldbach, we had a retrace to the consequent encroachment of the fair value gap. Third piece of evidence, this 3-month candle's target was to hit the GB level, which it did within 17 cents, then retrace back. Okay. Now, algorithm 2, what do we expect? We expect to start from the rejection block. Normally we retrace from the breaker down into the fair value gap, and then theoretically it will terminate at the opposing order block. Now, I'm not saying Tesla's price will get there, but I'm saying theoretically this is what the algorithm should play out. Now, if Elon Musk gets cancelled for what he's saying right now and his actions in Twitter, then Tesla could go to zero, obviously. But this shows you Goldbach playing its hand. Right, and look how sensitive these levels are. 299.29, 298.89. So now that's about 40 cents, I think. Okay, that's the kind of accuracy we're talking about. Right, that's what the fourth piece of evidence that Tesla obeys Goldbach principles. So far, I've shown you how Goldbach plays out on the higher power of 3, the 729. Let me now introduce you to the concept of fractal Goldbach partitions. Now, I want to draw your attention to the current spot price, 253. 253 is between the bottom of the breaker GB level and the top of the breaker GB level. We can create a fractal Goldbach fib and then see Goldbach playing out on the lower time frame. Okay, so we start at the low, we go to the high. Now it's not super accurate because I'm doing it by eye. Now let me remove the indicator and I will use my Goldbach fib. Okay, so this is a fractal fib using the Goldbach percentages. Let me just fix it because it's upside down, and I'm going to remove the extensions just so it's easier for you guys to see. There we go. So the way it works again is rejection block, order block, fair value gap, and so on. If we now reduce the time frame that we're working on, now the problem with stock is the price isn't so accurate. You have all these gaps that cause issues, so you kind of miss price, and this is why I don't trade stock using Goldbach. But what are we expecting to see? Let me label it up for you guys because you may not be familiar with the percentages. There is your order block. In the order block GB partition. Then we had a fair value gap, quite a big one, from here to here. And this is the fair value gap level. Now the issue is, of course, we have these opening day gaps, which makes it hard to see price. So maybe if we didn't have this opening gap, it would have opened lower. But this is why I don't trade stock using Goldbach. But you'll get to at least see it in action. There's your fair value gap. This is your breaker. What does algorithm 2 do? It goes rejection block, breaker block, fair value gap, and then it should terminate at the opposing order block. Bearish OB. Now, yes, it was off by a tiny bit. Let's see how much it was off by. The top of the fair value gap level is 226.28. If we get our price tool, it got to 226.54. So it's off by about 36 cents, I believe. But do you see how powerful this is now? Right, so this is, I guess, the fifth piece of evidence that even Tesla stock obeys Goldbach. Now this one, unless you trade Goldbach, you may think I'm form fitting, just because price isn't as accurate when it comes to stock, and especially these gaps make it a little bit difficult. But we have the order block in the order block GB level. We have the fair value gap in the fair value gap level. This is the liquidity void, and this is what we had. When ICT places his orders, he normally places them in the OB or the fair value gap, and then he usually has a little text bubble saying, I expect price to rip through now. Price rips through the liquidity void level. That's what it means. A liquidity void means there's no liquidity there. Price is up being only offered one way, and that's why things usually rip through. This is why we had the opening gap also, because prices weren't offered there. You understand? We ripped through. We had a liquidity void. Okay? We returned from the breaker. We came back down to the fair value gap. Yes, we were off by 40 cents or whatever that number was. But then we rejected from that fair value gap. And now, theoretically, we should terminate the opposing order block. Now, there's a lot that can happen between now and then. Elon Musk may say something that the establishment may disagree with. There's a couple of lawsuits against him because he's been a little bit too honest with what's going on in the world right now. But hopefully this gives an example on how you can use Goldbach to even trade single name stock. I hope today's lesson in Goldbach was eye-opening. If you would like to learn more about Goldbach, there's a link to Hoppy's official book in the description below. Or if you'd like to learn my golden bullet Goldbach trading strategy, there's a link to my mentorship. As always, if you have any questions or comments, feel free to post them below. Or if you have any suggestions on a video you'd like me to make, feel free to let me know.